Welcome to NYSE TV Live. I'm Allison Cossack, and today is Tuesday, April 9th, and we're coming to you high above the floor of the New York Stock Exchange. In just about half an hour, Hafnia, one of the world's biggest operators of product and chemical tankers, will celebrate its listing on the New York Stock Exchange by ringing the opening bell. Hafnia is responsible for transporting oil products, and chemicals for major national and international oil companies, chemical companies, as well as trading and utility companies. Hafnia owns and operates over 200 vessels while offering a fully integrated shipping platform. That includes technical management, commercial and chartering services, and a large-scale bunker desk. Hafnia has offices in Singapore, where the company is headquartered, as well as Copenhagen, Denmark, Houston, and Dubai, and currently employs over 4,000 employees, both onshore and at sea. Hafnia, the result of a merger between Hafnia Tankers and BW Tankers in 2019, has made some big moves when it comes to pools. In the shipping world, a pool is defined as a group of similar vessels that are managed together. Additionally, their earnings are pooled and distributed to the vessel owners as per a prearranged agreement. Earlier this year, Hafnia teamed up with Mercuria, a company specializing in trading and supplying physical commodities, to introduce a new Hafnia Panamax pool to commercially operate Panamax tankers together from their respective U.S., Europe, and Far East offices. The companies are committing 10 vessels with an average age of 13 years to bridge the gap across a segment Hafnia says is rapidly aging. Panamax refers to the largest size of vessel that can navigate the Panama Canal. Hafnia also offers pools across multiple other segments, including handy, smaller vessels that can access ports of all sizes, and medium-range vessels transporting cargo shorter distances, such as from the east coast of the U.S. to Europe. Hafnia also offers long-range vessels, chemical tankers, and specialized tankers. In Hafnia's 2023 annual report, CEO Mikael Skov said the year was marked by volatility and unprecedented disruptions in the supply chain, such as the conflicts in Ukraine and the Mideast. However, Skov also stressed that Hafnia was continuing to find success. Check it out.
Since the merger in 2019, our net asset value surged from $1 billion to $3.9 billion at the end of 2023. We've maintained our momentum in the market, concluding the financial year with our best numbers to date, a testament to our people first and performance culture. Our pursuit of greener shipping was at the forefront of 2023, with 3 of our 4 dual-fuel LNG vessels delivered during the year. In August, together with our joint venture partner Socatra of France, we officially announced our first steps into the methanol landscape, concluding an order on 4 dual-fuel methanol IMO2 MR new builds. I reiterate my pride of what we at Hafnia have accomplished, and I'm incredibly excited to continue this momentum.
Skov also says that his company's outlook for 2024 is promising due to anticipated growth in oil demand and the commencement of new refinery operations. When it comes to that increasing demand, consumers, they're already feeling it this spring. According to AAA, the average price of gas in the U.S. was $3.60 a gallon. That's higher than the month before, when prices were $3.40 a gallon. However, gas prices, they tend to be higher on the West Coast in states like California, where gas prices currently sit at a whopping $5.35 a gallon. But it's not only demand that's driving up gas prices. In March, OPEC Plus members, led by Saudi Arabia and Russia, extended voluntary output cuts of more than 2 million barrels per day. Crude oil prices, they've jumped from about $70 a barrel to close to $90 a barrel this year. Another big story in the shipping ecosystem has been the recent attacks on vessels in the Red Sea by Iranian-backed Houthi rebels. This has resulted in vessels rerouting and embarking on longer voyages. According to data from Hafnia, the average trip for one of these voyages through the Suez Canal is 26 days. However, that number soars when rerouting around the Cape of Good Hope on the southern tip of Africa. The average trip grows to 42 days on average. Hafnia says this has resulted in a 57% increase in average voyage lengths between hemispheres. All right, switching gears, Hafnia says one of the biggest things it focuses on is its people. Moments ago, you heard Mikael Skov refer to how his team navigated challenges as the Hafnia way. Here are what Mia Krogslund-Jorgensen, Hafnia's head of people, culture, and strategy, said about what her team did during the company's 2023 annual report. Listen to this.
Our emphasis remained on our people, the true cornerstone of Hafnia. Their well-being, inclusivity, and engagement catalyze our innovation drive. Whether it's optimizing TCE, ensuring the well-being of our crew, or pursuing a dynamic fleet renewal strategy, it's our people that can optimistically grow our business. As the maritime landscape shifts, so does our commitment to sustainability. Achieving zero emissions is not just a goal, but it's a principle of our future. Digital innovation is another frontier we're proactively advancing in, aiming to set benchmarks rather than merely meeting them. Looking forward, our vision remains on achieving and maintaining global leadership within the tanker space and in setting industry standards.
And in just a few minutes, Skov will deliver remarks from the boardroom before receiving an NYSE medallion and a listing certificate. Shortly after that, Skov and Hafnia's executive team, they're going to make their way to the iconic NYSE trading floor, and that's where they're going to be signing the Distinguished Guest Book. This is so significant at the NYSE because it represents a ceremonial act that symbolizes the importance of the exchange and those associated with it. It indicates the individual or organization's significance in the financial community and their contributions to finance and business. The executive team will then make their way up to the podium, and then at 9:30 a.m. Eastern, Hafnia will ring the opening bell and open up the U.S. equity markets. I'll speak with Skov and several members of Hafnia's executive team later in today's broadcast about what's next for the company as it officially lists on the NYSE. Let's go to the boardroom.
When I watched that video. Hello, everyone, and welcome to the New York Stock Exchange. My name is Cassandra Sayer, head of international capital markets. My team and I are responsible for attracting new listings from outside the United States into the New York Stock Exchange. And with regards to the Hafnia team, my team and I had the pleasure of establishing a continuous relationship around the clock, from Europe to Asia to the United States until today. And we are really, really excited. Today is not about us. Today is about Hafnia and you in the room. It is my honor to welcome Hafnia on adding a US listing today and officially joining the New York Stock Exchange listed community of 2,400 companies from 47 countries. The New York Stock Exchange is home to over 30 global shipping companies. It is also home to iconic brands, innovative companies, and companies who are mission-driven and forward-thinking. As the world's largest tanker company, which brands itself as the forward-thinking tanker, with ESG and sustainability at the heart of everything it does, Hafnia will feel right at home on the world's largest stock exchange. Additionally, with Hafnia's headquarters being in Singapore, truly holds a special place in my heart, where I was born and raised. And at ICE, which is our parent company, and New York Stock Exchange, we share the same ethos as Hafnia, which is we put people first to ensure the best for our world and a better tomorrow. Finally, congratulations on Hafnia for concluding the financial year of 2023 with your best financial performance to date. And with all these amazing successes come a successful CEO and a fearless leader With that, I would like to invite to the stage Mr. Mikael Skov to say a few words.
Thank you. Ladies and gentlemen, colleagues and partners, I guess as an initial comment, if anyone at some point don't think this event in itself is exciting enough to remember, I guess we were giving a little bit of help by being around here, both an earthquake and a total solar eclipse. So at least from that perspective, you know, we should all remember a little bit about the timing of the event today. Thank you very much for joining us. Today is a moment of immense pride for all of us at Hafnia as we mark a significant milestone in our journey, the listing of our shares on the New York Stock Exchange. Around 5 years ago, we did the same in Norway, and I can only say that you definitely don't get used to the excitement. While most of our teams across the world could not be here, the achievement is a testament to every member of the Hafnia family, our employees, partners, stakeholders, representing everyone's hard work, our shared vision, values, and our relentless pursuit of excellence in being the forward-thinking tanker company. As you ring the opening bell at the New York Stock Exchange today, we not only celebrate months of effort, but also the beginning of a new chapter, one that holds new possibilities, opportunities, and challenges. Listing on the New York Stock Exchange opens doors to a broader investor base and providing us with a platform to accelerate our growth and continue creating sustainable value for our shareholders. It signifies to our commitment to transparency, accountability, and good governance, principles that are fundamental to our success. But beyond the numbers and financial metrics, today is about more than just a listing. It's about the countless individuals whose passion drives our success. It's about the global communities we serve as a shipping company and the positive impact we strive to make in the maritime industry. A special thanks goes to our shareholders for their trust and confidence in Hafnia. It is their support that fuels our ambition, inspiring us to reach new heights. As we ring the bell at the New York Stock Exchange today, we hope it rings not just within these walls, but across our ships at sea and our offices across continents, signaling a new era. Thank you.
So, Mikael, I want to present you a listing certificate. And this is the listing certificate of Hafnia, which is dated today. And congratulations again on this wonderful day, April 9, 2024. We'll make sure we ship this back to your office, whichever location that is.
Thank you.
And then we also have, every day, every morning, for opening bell, we actually strike a medallion in the morning to make sure that we commemorate the special day with your name engraved on that. And on the front of this medallion is our 6 pillars of the New York Stock Exchange, which is your home away from home. And this is the free entrepreneurship that you will always remember, as well as the Buttonwood tree. You saw in a video earlier where 24 brokers came together to sign the Buttonwood Agreement. And this is where they decided, that we will come together and make sure we instill confidence and, stability in the stock market. So this is a wonderful present that I would like to give to you.
Thank you.
You might have more than one of these, I suspect.
No, not at all.
Okay, good. And for those in the room, we also have a little one for you to bring home to celebrate this special day. Before we head down to the trading floor, I would like to toss back the broadcast to our host, Alison Kosick. And for those in the room, if you have a strike...
All right, Cassandra, thanks so much. And as you just heard from Cassandra Sire and Hafnia's CEO, Mikael Skov, Mikael saying this is a day of immense pride, and that's something that the company did 5 years ago in Norway, where it listed on the Oslo Stock Exchange. He said this moment is really a testament to every member of the Hafnia family, representing everyone's hard work. Let's dive deeper into this topic of shipping and more. Joining me now is John Cartsonas. He's the founder and managing partner at Breakwave Advisors. It's a firm specializing in shipping and commodity investments. Thanks so much for taking time out to talk with us today.
Pleasure to be here.
So the war in Ukraine and the situation in the Red Sea, there are two geopolitical conflicts impacting the shipping industry. Let's talk about your vantage point. How do you think this is reshaping the shipping market in 2024?
Well, I think shipping has become in the front page of news lately for the wrong reasons, of course, because you do have the conflict in the Red Sea. Obviously, we had the Baltimore situation a few weeks back. You have the Panama Canal, which due to draw, you have less ships transiting. So there's a lot of issues happening globally that's affecting the shipping world. And that's something that I think most of the investors underestimate, how important shipping is today in the global economy. I mean, if you think about it, what shipping does is it connects the economies together, right? You have the producers and the consumers, and goods have to move from one side to the other. So shipping is basically this connecting link between the economies. Today you have a lot of disruptions, geopolitical disruptions, accidents, weather, and that's affecting shipping to a greater extent than before. And it's also affecting the consumer prices because you have to pay to transport these goods.
You said the investors underestimating these disruptions. In what way do you think that is, and what's the impact of underestimating the impact of these things?
So as you see globally, the investment market cap in shipping is tiny versus other parts of the economy. Is not really as important in the day-to-day investment decisions that people make. And I think that's going to change. And it's changing, of course. Now you see with what happened with the Houthis in the Red Sea. You saw what happened with the Baltimore accident. A few years back, you had the Suez Canal and a big ship was stuck there, right? And that affected basically a lot of consumers. So I think people are starting to pay more and more attention slowly in what's happening, because at the end of the day, it's not like 20 or 30 years ago that shipping was irrelevant. It's very relevant. When you talk about inflation, right? Prices rise and fall based on transportation goods as well, not only on demand. So you have to pay attention to shipping.
Your firm, Breakwave Advisors, that offers asset management and advisory services to the shipping and commodities industries. Talk me through what some of the biggest questions investors are looking to get into shipping and commodities. What kind of questions they're asking right now?
Right now, the main focus is inflation, right? Because at the end of the day, that's what's driving today markets to a greater extent. And people want to know, does any event that's happening globally is affecting transportation prices and ultimately inflation? So that's the number one issue that people are asking today.
Breakwave has two ETFs trading on the NYSE ARCA, the dry bulk shipping ETF and the tanker shipping ETF. What are some of the main objectives of each?
So both of these ETFs, what they're tracking is the price of freight. The dry bulk ETF tracks the price of freight for dry bulk goods like iron ore and coal. And the tanker ETF tracks the price of shipping oil, crude oil. So the idea behind both of these ETFs is to get a clean, direct exposure to the price of freight. Obviously, you have shipping companies like the one that's listed today, that is a company and operates the ships. The two ETFs basically are directly investing in the price of freight. They don't own any assets.
As industries evolve over time, what do you see as some potential storylines or challenges facing the shipping industry in the months and years to come?
I think the number one issue today in shipping has to do with renewable fuels. So to bring down the carbon footprint of shipping, which is huge versus other industries. And that's a trend that's going to continue for many, many years. Now, this transition probably will bring disruption as well, because in order to transform from traditional fuels like fuel oil to like alternative fuels like LNG or methanol or ammonia, this will require many years, and that will bring a lot of disruption in the industry. That's probably going to be positive for freight rates going forward, because whenever you have a disruption, prices tend to rise. But I think that's the number one challenge for the years ahead.
And of course, those costs will be passed down to consumers. So we see this just sort of adding to the inflation picture, right?
Yeah, over the long run, I think you're going to see transportation costs rise because of that. It's much more expensive to use alternative fuels than the traditional fuels. Everybody knows that. Look what's happening in the electric car industry with cars, and probably down the road maybe other fuels. But I think like ultimately the price of freight will rise over time because somebody has to pay for the more expensive fuels.
At this point, does the industry just have to get used to a higher price point? Is that sort of, we talk about it as inflation and that we think it's going to come down. Is this just a situation where you don't see that happening?
Well, I think like, shipping used to be a commoditized industry, meaning that transportation was a given, is not anymore a given. Plus, there is a higher quality in terms of transportation today. Safety, alternative fuels, lower carbon footprint. All these are rising every year, and that's going to bring the cost of transportation higher for the years to come.
All right, John, thanks so much for your expertise. Appreciate it.
Great to be here, thank you.
All right, the Distinguished Guest Book is so significant at the NYSE because it represents a ceremonial act that symbolizes the importance of the exchange and those associated with it. As we can show you a live picture now of the executives walking over to sign this book, and it indicates the individual or organization's significance in the financial community and their contributions to finance and business. And as you can see, the live picture of the CEO of Hafnia and its other array of executives right there getting ready to sign it. A great moment indeed. And as we watch that, tell you about, we just dove deeper into Breakwave Advisors ETFs here at the NYSE fund, at the NYSE. Another fund, the Destiny Tech 100, is an exchange-listed portfolio tracking some of the top high-growth tech companies. It began trading on the exchange in late March. Our Trinity Chavez spoke with Destiny XYZ CEO Sohail Prasad about his company earlier this year. Check it out.
Destiny XYZ is an investment management company that provides public access to private tech markets. We're going to find out how on this episode of Taking Stock.
I dropped out and moved to San Francisco when I was 17.
Okay.
And so I basically grew up in San Francisco, got to experience all of tech. And I was back home in Dallas one day, and my dad said, "What should I invest in?" And it made me really think about, why is there not one place that people can go through their brokerage app and actually have access to top companies like SpaceX and like OpenAI? Why is there not an ETF that does that? And so that was the genesis for Destiny.
And tell me about your mission to empower individuals through technology and AI.
So the idea behind Destiny is to be able to give everyday investors the ability to invest in top private companies before they go public.
Okay.
And so these are the companies that are impacting everyone's daily life. Epic Games, Superhuman, but they have no way of participating until they come and list here. And so that's why we created the Destiny Tech 100, meant to be a portfolio of the top 100 private tech companies.
Would you say that's the biggest challenge that Destiny is facing right now when it comes to bridging that gap between the public and private sector?
Yeah, one of the big challenges was actually regulatory. This doesn't really exist. You have ETFs and you have publicly traded companies, and you have private companies and VCs and private markets. And so trying to bridge both of these, we've spent the last 4 years actually working with the SEC, trying to get our first fund, the Destiny Tech 100, approved. And actually going through all of those hurdles. How do we create a regulated, registered, listed product that still holds all private companies?
So let's talk about Destiny's branding for a second. DXYZ. Why these initials for Destiny?
As we were looking at Destiny and we saw DXYZ, XYZ to us represents the future.
Yes.
It represents the future of the private markets and the future of the public markets. And so that's what we wanted to bridge.
Yes.
And so for us, DXYZ was very futuristic. It's also that visual representation is how it's going to appear in people's portfolios.
And can you give me some examples of the companies that you work with that are included in Destiny's portfolio?
In our portfolio today, we already have companies like SpaceX, like OpenAI, like Epic Games, and a number of other late-stage venture-backed companies.
Amazing. Well, thank you so much for joining me today.
Thank you for having me.
Together, we built something truly beautiful.
It takes years of dedication to get to this milestone.
New York Stock Exchange is the symbol of what America's all about, the potential of an American dream.
It is day one. A lot of work has happened to lead to this historic moment.
The only way you can move a society forward is a true expression of freedom.
Connecting the opportunity is just part of the hustle.
Opportunity is using data to create a competitive advantage.
It's raising capital to help companies change the world.
It's making complicated financial concepts seem simple.
Opportunity is making the dream of home ownership a reality.
Writing new rules and redefining the game.
And driving the world forward to a greener energy future.
Opportunity is setting a goal
and charting a course to get there.
Sometimes the only thing standing between you and opportunity is someone who can make the connection.
At ICE, we connect people to opportunity.
Welcome back. Joining me now is Cassandra Sire. She's the head of international capital markets for the NYSE. Thanks for coming on the show. Hi, great to see you.
Thank you for having me.
Talk me through how significant of a listing is Hafnia at the New York Stock Exchange.
It is very significant. We have over 30 in the shipping industry, and NYSE is the place where a lot of companies really want to come to increase their visibility, to make sure that they're tapping into the deepest liquidity in the world. We're really proud of Hafnia. It is a global company with offices all around the world, similar to New York Stock Exchange and the way that our team is structured. Our team has been engaging with Hafnia from Europe, Asia, and the US. So really happy to celebrate the day here today.
What are some recent trends and activity you're seeing across international markets?
Yeah, just like Hafnia, we're seeing interest in companies that are already listed elsewhere and looking at a US listing, so they call it a dual listing, as well as companies that are private today and looking to debut in the public market. And US is the best place in terms of liquidity, as well as the broad base of investor and a high quality investor base.
Cassandra, thanks so much for your expertise. Thanks for joining us on the show. We are just minutes before the opening bell, but let's go to a word from our parent company.
Around the world, the transition to a new energy economy presents a challenge for companies and investors. At ICE and the New York Stock Exchange, we facilitate the conversations to find solutions to complex problems. We gather a wide range of perspectives to help companies navigate the growing need to recognize climate risk as investment risk. We offer sustainability data and the world's most liquid environmental markets, so clients can measure, manage, and mitigate their risks. Wherever you are in your sustainability journey, we provide the tools and networks to help you identify risk, spot opportunity, and make more informed decisions.
And welcome back to NYSE TV Live. I'm Allison Kosick. We are just moments away from the opening bell when Hafnia's CEO, Mikael Skov, is going to be ringing the opening bell. I'll tell you a little bit about what Hafnia's CEO recently said about his company. First of all, its primary listing is on the Oslo Stock Exchange, so this is a secondary listing happening here at the NYSE. Hafnia's CEO, Mikael Skov, recently said that being listed here on the NYSE will broaden the company's investor base and enhance its access to capital markets. He said that Hafnia's presence in the U.S. market, it will wind up providing potential new investors direct access to its commercial performance and proven track record of shareholder returns while generating increased value for its current shareholders through additional trading liquidity. This is the world's largest tanker company, which brands itself as a forward-thinking tanker with ESG and sustainability at the heart of everything it does. The company saying that they put people first to ensure the best for our world, and the company saying that they're committed to leading the maritime industry into a better tomorrow. The company also says it strives to always be a business that people can thrive in and investors can be confident in. A little bit on the CEO. He is, let's go ahead and watch him ring the opening bell. And there you have it. That's the opening bell here at the NYSE. Hafnia's CEO ringing the opening bell. I want to go to the ICE Experience 2024 just happened. Check this out. And welcome back. I am here with Michael Rankin. He is the, you are the?
Senior Market Strategist for the New York Stock Exchange.
Slipped my mind, my apologies. Let's talk about what's going on here. This is a big week for inflation data. CPI coming out tomorrow, PPI coming out Thursday. What are investors actually pricing in?
Yeah, so I mean, I think that is going to be the key focus for this week. Last Friday we got a very strong jobs report, but that was accompanied with kind of an increase in the labor participation rate, as well as kind of a tick down in the unemployment rate, and the wages data was pretty tame. So that really puts the focus solely on CPI, as you had mentioned. Markets, we've seen interest rates moving pretty significantly higher over the last couple months, right? So markets are starting to get a little bit more concerned, kind of with the inflation backdrop. We've also seen commodity prices start to move a little bit higher, but at this point, I think markets are looking for a little bit of an uptick on headline inflation, but to see kind of that core CPI to move a little bit lower tomorrow. But given the move we've seen in rates, right, it does seem like markets are reasonably well prepared for kind of another slightly hotter than expected number.
Yeah, and this past Friday, Fed Governor Michelle Bowman said an additional rate hike could be needed if inflation stays high. Are you sensing any concerns about a rate hike? I mean, we've only been talking about cuts.
Right. So I mean, I think from a market perspective, right, and I've been kind of talking about this for a couple months, markets are willing to tolerate slightly hotter than expected inflation data, slightly higher kind of interest rate environment, as long as that's being accompanied by strong economic data, right? And that's what we've been seeing thus far. So at this point, markets have been kind of pricing out those expected rate cuts. We've gone from 6 to 7 at the end of last year. We're now looking at closer to 2 from a market perspective, 2 to 3. I think if the conversation does start to turn to rate hikes again, that's going to be tough for markets to endure. But as long as we're kind of working under this assumption that kind of we've seen the peak of the interest rate cycle at this point, I think markets will be able to tolerate that.
All right, we are approaching the first earnings season of 2024, starting this Friday with the big banks. What are some of storylines that investors are going to be keeping an eye on as major companies prepare to record their quarterly earnings?
Yeah, so according to FactSet, right, analysts are looking for earnings estimates to be up a little over 3% on a year-over-year basis. That'll be the third consecutive quarterly increase. We have seen kind of below average reductions in those revisions to those earnings going into the kind of announcement period. But we're seeing a larger number of companies start to kind of negatively pre-announce than we have seen previously. So I think the real key themes going forward are going to continue to revolve around this focus on efficiency and cost cutting, which is helping companies offset some of the kind of demand weakness that we've seen here in the market a little bit. From a consumer perspective, we're starting to see some weakness on the consumer side of things, right? And that's going to be a key focus. But we do kick off with the banks on Friday, with the markets starting to price out rate cuts, right? That's a positive for the banks, right? So that should help, and we are starting to see kind of a pickup in this capital markets activity, which is really a positive.
Thanks so much, Mike Rankin, for your expertise. All right, let's go ahead and walk over to the first bell. We're seeing the executives gather around. Todd, you can go over and take a quick look at what's going on here. Oh, we're seeing everybody gather for the first bell here, and waiting for the CEO of the company to about to ring it. Let's take a live look. And there you have it, Mikael Skov ringing the first bell. We're going to wait for him to walk over to me when he's finished with this extraordinary moment. He's going to be talking with me in just a moment. As far as the markets go, we're seeing sort of a holding pattern as the day begins. Focus, of course, on interest rates and, of course, on CPI, PPI this week. And sort of coming off of that jobs number from last week. Of course, the focus is going to be on what the Fed is going to do, whether we're going to see rate cuts as the market has been expecting, 2 to 3 for the year, or will the Fed go ahead and hike? And now we are joined by the CEO of Hafnia, Mikael Skov. Thanks so much. Congratulations.
Thank you very much.
How does it feel?
Yeah, it feels like we've been waiting for this for quite a while, actually. So, no, it feels good. I think it's a great timing for the company, good time of the market. And, we've been looking forward to engaging with the New York Stock Exchange.
Why now is the right time to list here at the New York Stock Exchange, do you think?
Well, I think part of it is that our market and the business is doing very well. And we've reached a size now where scale-wise, we actually need access to a broader investor base. So the timing is about the business going really well, have grown a lot, and now we're ready for a new market, basically.
Talk me through how Hafnia has been positioning itself to withstand the geopolitical challenges, like the war in Ukraine, the situation in the Red Sea.
Yes, I think part of the way you do that is actually by having a large scale of fleet, so that you basically can position the ships around the world depending on where markets are going. The other one is to make sure you have low cost. So basically, no matter what happens in our markets, Hafnia has the lowest cost amongst our peers, which means that we are able to resist volatile freight markets better than a lot of the competition.
What are some of the biggest goals for Hafnia in 2024?
Well, first and foremost, I think some of the biggest goals is to take advantage of the very strong market we're seeing at the moment. So freight markets are strong. We are paying out a lot of dividend to the shareholders. So, to continue to pay dividends in a strong market is one of the great goals for this year.
I saw that Hafnia also was focusing on reaching a target of hiring 40% women by 2024. How's that going?
It's going well. So we are now, in the mid-30s, and we are seeing a lot of progress, not just on onshore, but also among sea. So, our seafarers now is moving up quite rapidly when it comes to women at the vessels. So that's another good thing. So it's a focused area, and I'm quite convinced we're going to reach these goals for sure.
Thanks so much for your time, and once again, congratulations.
Thank you so much.
Okay. All right, let's move on over to our next executive. Hi there. Hi, Perry. Great to meet you. This is Perry Van Echtel. He's the CFO of Hafnia. Thanks for your time today. What advantages about dual listing here on the NYSE excites Hafnia
Well, of course, we're very excited here this day to be joining the New York Stock Exchange. For us, it was very important to get also access to U.S. investors. We have predominantly a dollar-based business, so we've been successfully listed in the Oslo Stock Exchange for almost 5 years. Now entering the U.S. market with a U.S. dollar quotation of our share price gives us also more access to U.S. investors and a broader investor base.
What are some areas of the business that you're most focused on after listing here at the NYSE?
Well, after this, we continue focus on the business that we do, which is transporting refined oil products and chemicals. So this is an important milestone for us to get further ahead in the business. So that's what we're focused on, do what we do.
Wonderful. Congratulations,
Thank you
Perry.
very much.
Thanks for your time.
Thank you.
I want to bring in the next executive, Hans Christoffersen. Thanks for joining us. Hans, you are the head of commercial for Hafnia. What are some new opportunities that Hafnia is pursuing now that it's trading on the NYSE?
Now that we're trading on the NYSE, it reinforces our brand. We'll continue to try to build on that leverage, and we want to grow our business as we've been doing for years, and do that by delivering superior service to our customers.
Does this move change Hafnia's strategy and ambitions in any way?
No, it doesn't. We want to continue to prepare for the future, and we want to continue to having focus on our customers and deliver the service that means that we're actually producing a good result for our shareholders as well.
Hans Christoffersen, thanks so much for your time.
You're welcome.
Okay, let's pause for a minute from our parent company.
Rising in frequency and severity. Increasingly, climate risk impacts investment risk. To help integrate these risks, the ICE Climate Transition Analytics tool generates analytics to identify, assess, and report climate factors in portfolios and loan books. Upload a portfolio to generate an array of climate analytics. Access carbon footprinting analysis, avoided emissions data, and Scope 3 emissions data. Conduct net zero analysis. Compare portfolio and benchmark pathways. Check portfolio's progress towards stated decarbonization targets. Conduct scenario alignment. Analyze portfolio implied temperature rise score and assess trajectory against chosen climate scenarios. Calculate temperature scores using the Science-Based Targets Initiative aligned approach. Access stranded assets data and analyze fossil fuel reserves footprint and country-level exposure. Generate and customize powerful reports, including TCFD-aligned reports that can help you meet your regulatory and stakeholder requirements. Access ICE's Climate Transition Analytics and more today.
And joining me now is Mia Jorgensen, VP, Head of People, Culture, and Strategy at Hafnia. Thanks so much for joining us. Talk with me about what today's event means for the team members.
Oh, it means a lot. It's a huge accomplishment. We're also proud to be here. So we're excited. It's been a hard build-up. We've worked very hard. So this is just amazing.
And we just talked briefly about this with your CEO. The company has had a target of hiring 40% women by 2024. How is that going?
It's going well. We're on track. It's actually by 2030 our target of 40%, but we're working hard. It's not only about the target, it's actually what you do underneath, which projects do you have to support that target, and we're working very hard on that. One thing is on the offices, we're also working on board our ships because we see with our crew it's very male dominated, so we're working hard on getting women on board our ships as well.
To get to this moment here at the New York Stock Exchange, it does involve an incredibly dedicated and committed team. What would you like to say to everyone watching today?
Just a huge thank you. Everyone has worked extremely hard, so we should all be very proud that we're able to be here today.
Wonderful. Thanks so much for your time, Mia. And I want to move on to Ralph Jewell. He's the Executive Vice President, Head of Technical at Hafnia. Come on in, let's talk. Congratulations. Talk us through how technology and digitizing is changing the tanker industry and how Hafnia is leading this movement.
First of all, this is amazing. It's a fantastic experience to be here. But going back to the engine room, and we have to digitalize the future ships is a big task, but also major important, because ships are moving faster. It's more important that we bring forward the goods in due course, and we have to digitalize in order to optimize and make all the environmental advantages that lays with digitalization.
What are some of the biggest challenges, though, that come with making your tankers more intelligent?
Crew. The crew and the skills of the crew is becoming major important. It's going to be a change in the way we think of seafarers and the job they have to perform. They have to be another kind of seafarers. So it's a big challenge to change these features for seafarers.
And so what other challenges do you think are ahead?
Yeah, but I think that traditionally seafarers is handicraft. It's people who could sail a boat, could read the weather, etc. But in the future, going forward, we will see much more. They have to sit in front of computers, doing their orders, the maintenance, everything will be digitalized.
Wonderful. Thank you so much for your time.
Thank you.
And we have one more executive. Yeah. Great to meet you. Say your name.
Soren Steenberg.
Great to meet you. How does it feel today?
Well, it's a great experience. It's really a landmark in our company's voyage. I mean, we are only 13 years old, and we are now listed on two markets, and it's quite spectacular. It's quite spectacular.
What are the challenges that you're seeing ahead?
You know, the markets are super hot right now, and from I'm head of asset management, and from an asset perspective, of course, it's very expensive assets right now to acquire and to grow. But we were very lucky. We made a lot of transactions a year and a half, 2 ago. We acquired more than 50 ships. The timing was pretty good, and now it's all about enjoying and reaping the fruit.
Wonderful. Congratulations, and thanks for your time. And we're going to move on over to one more executive, Thomas Anderson. Thanks so much for coming over. What are some of the biggest challenges that you're seeing Hafnia have at this point now that it's dually listed both in Oslo and here at the NYSE?
It's outgoing, getting new U.S. investors and increasing the liquidity for our shares and benefiting our investors.
What message do you have for investors as Hafnia begins trading in the U.S. equity markets?
Yeah, interesting times. The market is strong, and now we're going to increase liquidity for Hafnia's investors.
And what are you going to do to generate more interest in trading?
We have an active dialogue with investors both here in the US and in Oslo in Norway.
Wonderful. Thomas Anderson, thanks so much for your time and congratulations. And there you have it. I'm Alison Kosick, and this has been NYSE TV Live. See you next time.
Iconic brands speak for themselves. The strongest brands stand the test of time. We are so excited to welcome you to our community. Today is all about you.
We've never lost sight of what we're trying to do and deliver that mission.
Going through this experience with our partners and my families has been unbelievable.
We imagined something that didn't exist yet, and we believed that we could do it.
You're going to look back on this accomplishment as one of the finest you've ever done.
I want you to know that the best is yet to come.
Just a few minutes, we'll go downstairs to the legendary New York Stock Exchange trading floor to ring the opening bell. The history here, the tradition, it's just incredible for us to be at this moment.